What's the end game for Bitcoin? Let's discuss. Hey everyone, welcome back to Upside Down Data. Today I want to talk about Bitcoin and what is the long-term end game for it as an asset class. We're at the point of the cycle now where we're very much in the boredom phase, the phase where people start questioning whether or not crypto can ever come back. People saying that the 2021 bull run was the last one and you missed it, so on and so forth. You go on crypto Twitter, that's the sentiment. Very doom and gloom, thinking that the bull markets are behind us. What I want to talk about, though, is what are the long-term reasons that we might think that that might not be true, that as boring and as bleak and depressing as Bitcoin's price action has been in the last month or so, what is it that we can look for in the longer term to say that this is the end game for Bitcoin that might give us a sense of why it should continue to move up and to the right over a long enough time frame. So I want to revisit some narratives people put forward and talk through if the data really supports those and what we might think. So one of the narratives that's been quite popular more recently for Bitcoin is that Bitcoin is a hedge against monetary debasement. So if we go over here, the blue line here that I'm showing you here is the M2. So this is the money supply. This is one way of calculating the money supply. It counts things like deposits in banks, the amount of cash that's out there, and then also things like deposits in savings accounts. It's a pretty broad measure of how much just cash is out there in either super liquid or very near to be liquid assets, or cash assets specifically. And so the argument that people have been putting forward for this is that Bitcoin is a hedge against this, that when you get points of growth, of a lot of growth in the money supply, that tends to be when Bitcoin's price moves up a lot. And then points of contraction in the money supply would be when price of Bitcoin would go down, or at least slower rates of growth. So what I did here is I took the M2, so the blue line here, and I just charted out that over Bitcoin's different bull and bear markets, how much has the money supply moved up in those different periods. And so you can see if you just look at the raw numbers, it went up 7.45% in this first bull run, 5.59% in this bear market, and then it went up 14% in this bull run and then down 7.45%. Generally speaking, what you'll see is that the money supply increases more during Bitcoin bull markets than it does during Bitcoin bear markets. So you might look at that and say, all right, well then that seems to be proof in the pudding right there, that Bitcoin is a hedge against this M2 growth. Well, maybe, but there's some potential problems to that. So the first issue, of course, is that for Bitcoin, bull markets tend to last longer than bear markets. This is just in the data. We know that tends to be true. Periods of appreciation last longer than periods of the bear markets of drawdown, though those, of course, feel very dramatic when you're experiencing them. And so if you just have anything that's slowly growing over time, you're going to see this pattern where it's going to grow more during the bull market than the bear market, simply because there's more time in the bull market than the bear market. So that might not actually indicate any sense of causality, it might just be correlational. And really what I would argue, when you just look at this data, you can see that the growth of M2 is pretty consistent all throughout Bitcoin's life. And really the only aberration or anomaly in this chart happens right here around the massive stimulus that happened around March of 2020. But what you'll often see get kind of twisted up in this narrative is that people just take this one most recent occurrence, this most recent bull market, and say, all right, look, you have to have monetary growth to have Bitcoin appreciate in price. It's a necessary precondition because look how far M2 grew over this last bull market. You need that same kind of growth again for that to happen again. And you see this. So I'm not trying to bash on TXMC. I think he's a great analyst, puts out a lot of great content. But this is one tweet which is representative of a lot of sentiment I've seen about this idea out there. But it's this idea that Bitcoin can only go on these bull markets if you have massive growth in the money supply. So 40% of dollars existence were printed here, and Bitcoin peaked out at 69K. And then the idea that he's putting forward here is, how do you think Bitcoin's ever going to rally again without that kind of stimulus? Well, if you just look at the chart, Bitcoin's done just fine in prior cycles without that kind of stimulus. So I don't know why people are thinking that this is a necessary precondition. At best, this is a possibility. But really, when you look back in time, you'd have to say that suddenly something has changed about Bitcoin, that now this is now necessary where it wasn't before. Because before, there's a pretty steady growth. And really, these differences in percentages might simply just be the differences in time of it moving up and down. Now, of course, you could also argue that the reason that Bitcoin bear markets are so are so relatively short relative to the bull markets is that there is this underlying growth in the money supply that ends up picking it up. So it certainly is possible. But at best, this is correlational evidence, and certainly to be arguing that it's a necessary precondition for a bull market feels incorrect, or at least premature, in my opinion. So that's one thesis that's been put out there more recently about Bitcoin. That's this hedge against monetary debasement. And so the longer term perspective would be that assuming that M2 or the money supply continues to increase as it has, and obviously the data series goes way back further than this, and it's just been up and to the right that entire time. So if that's the case, then that's one possible reason for why you think that Bitcoin would eventually just continue to appreciate and appreciate over time. Is that M2 is just going to keep appreciating, the money supply is going to keep appreciating, so on and so forth. But another possibility I think is interesting to talk about as well is to go back to the older narrative around Bitcoin, that it was a hedge against inflation. Now, this one lost some of its appeal given what happened back through here. But what I want to talk about now is that, again, might have just been a recency bias, and maybe we're throwing that narrative out with the bathwater a little bit too soon. So we do a similar type of analysis I showed with M2. We can see, again, that so this is the CPI, not year over year. This is the actual CPI. So basically, this is the average cost of items in the US. And so that's what this blue line is. So as this goes up, basically, as this is going up, that's inflation. Prices are rising. Usually this is looked at as a rate of change. People look at the rate of change of the CPI, but I think it's also useful just to look at the raw underlying data. And what you can see is when you just look at raw increase in prices in this index across the whole time, you also see that pattern where prices will increase more during Bitcoin bull markets than they do during Bitcoin bear markets. And you again could argue that this is maybe just because Bitcoin bear markets tend to be shorter than Bitcoin bull markets, and that's certainly possible. Though you do see oftentimes in these points where the CPI is actually being relatively flat during Bitcoin bear markets and then really exploding during the bull markets. And really, this last one over here was the main break from that pattern where you saw, after Bitcoin put in its top, a continuation of the consumer prices rising pretty rapidly, technically smaller, but equal to where we were over here. But if we then look at the CPI in a year-over-year fashion, some interesting patterns start to emerge. So this is obviously the Bitcoin price here. Orange line is the CPI year-over-year over here, which is the way that people are used to thinking about this. What's actually really interesting when you look at this is that Bitcoin tends to front-run the peaks of inflation by about 7 months. 3 months of the first one, then 7 months every cycle after that. And so one way that you might look at this is that Bitcoin is rallying in these times when inflation is rising, like we're seeing over here. But then it gets a little bit overextended. It ends up topping out before inflation is actually peaked out. People are taking profits. They're getting out as the market gets too overheated and things move out. And this also makes sense because inflation tends to rise during expansion periods in the economy. But then when inflation gets too hot, when it moves too far, that's when you get the brakes put on. That's when you get monetary policy responses, so on and so forth, like we've seen here, which tends to be negative for asset prices. And so one thing that's possible with Bitcoin is that it does act as kind of an inflation hedge, but only for that kind of initial big expansion booming phase. And then once inflation gets a little bit too hot, that's when it starts cooling down. People take a lot of profits and move out, though they have maybe hedged against a lot of the inflation that's already happened. So I think either of these remain plausible. I think it's, with these data alone, you can't say that either is causal, but it seems reasonable that either or maybe both could be underlying factors that are driving some of Bitcoin. Either just directly that people want to get exposure to this because it's something that's relatively decorrelated from other things, or at least it's not connected to governments per se. But then also it's probably related to the business cycle, just with the fact that inflation tends to rise a lot as you get a booming phase in the economy, and then only once it gets too far do things tend to drop off. And so Bitcoin's following that, but still acting as that inflation hedge. And so you can just say that if that pattern continues, inflation will continue to happen, prices will continue to rise, the economy will contract and expand, that maybe Bitcoin would just continue to do that throughout time. That'll continue to have these bull and bear markets, but generally speaking, as long as people are looking for some way of not just holding cash that's going to depreciate across time, there's a market for assets that can help them hold their value. And that's ultimately where I think the end game for Bitcoin might be going to. Regardless of whether you think it's largely hedging against monetary debasement, if you think it's hedging against inflation, or if you think it's that just Bitcoin goes along for the ride with the market cycle. There's clearly seems to be a demand for assets that help you just get out of the dollar, which just continues to depreciate. Just looking at this chart, you can see that the purchasing power of your dollars is decreasing over time. There's going to be a market for assets to hedge against it. And up until, before Bitcoin came into existence, you had things like gold, which I'm showing you here. And what I'm showing you here is actually the price of gold divided by the CPI index. So prices, consumer prices. And so you'll note that deviates notably from the raw price of gold, the nominal price of gold, which set in higher highs over here relative to over here. Whereas when you're looking at divided by the inflation, basically increase in the price, the CPI index, what you can see is that it's actually just kind of going up and hitting these peaks and more actually acting as an oscillator. And you can also see that gold does something similar, although maybe looking a little bit worse, against M2. That if you divide the price of gold by M2, it also seems to be acting as this oscillator, though here didn't even get anywhere close to as high as it did back here in the 80s over here. But even in the stock market, you can see the same thing. So this, what I'm showing you here, is the S&P 500 against the CPI index. And you can see that it's done a little bit better than gold. It's actually appreciated against that cost of goods when you think of kind of the buying power of the dollar. And you can see, though, that it's of course not as high as just the nominal price of the S&P 500. Look at here, for example, where you have a lower high in 2008 versus 2000, whereas we obviously know there was a double top in the stock market for the crash, then the big rally. Stock market's done a little bit better than gold, but the same idea. And then when you look at the stock market against M2, you see it more acting as this oscillator, where it just kind of has this point where it's really rallying, moving up faster than the money supply is increasing, and then these points where it really crashes against the money supply, then comes up, kind of acting as this oscillator. And I think what these are telling us is that there's a market out there. There's a desire to be able to get out of the dollar, which just continually depreciates with time, into some other asset class that can at least either oscillate against the CPI or oscillate against M2, be that the stock market or be that gold, being two main ones. And so what I think is maybe a reasonable thought for Bitcoin is maybe it'll ultimately end up doing something similar. That we're in this initial phase where it's really expanding against, in this case I'm showing you M2, but it's a similar pattern against the CPI, where you're really getting this place where this is outperforming debasement massively, this is outperforming inflation massively, and so it acts as a good place to be relative to those. But you might have imagined that eventually sometime in the future, we're going to run into that phase where Bitcoin maybe will cool off for a while. It'll have more of a time of moving flat, in which case it moves down against those two things. It moves down against inflation, it moves down against M2. Then it has periods of expansion again. And so the question would be, how long can these expansion phases last before we might expect a contraction? And the contraction doesn't mean that Bitcoin has to go to zero. It just means that it could go flat, and then you'd have M2 increasing, CPI increasing, which would make these ratios decrease. Then you have that next phase of Bitcoin expansion, which should have it move up as well. And so that might be a perspective on Bitcoin where you're not expecting to continue this massive run forever and ever and ever, like some people predict, this idea of hyper-Bitcoinization, that this might be something that's a little more measured, something like what gold tends to do, where it'll have these big runs, then these periods of not doing a lot, big runs, periods of not doing a lot, and then eventually big runs. But that's not a bearish outlook on the asset class. Overall, gold has been a very well-performing asset, and then of course the stock market even more so. And so if Bitcoin can be a better gold, it would still be a very bullish outlook. It just wouldn't be this continual melt-your-face-off rallies all the time. So I think the question we have right now then is that in the shorter term, you can obviously ask questions about whether or not Bitcoin is going to go immediately on another big tear or not. But in the long term, I think that's reasonable to think that as long as these dynamics play out with asset classes where people want exposure to something that's not the dollar because they know that their dollar purchasing power is just going to decrease, and then if Bitcoin can act at all like gold or the stock market in that context, then that would lend itself to a long-term bullish outlook on Bitcoin, even if there are some boring phases that would happen to it along the ways where it doesn't do a whole lot. So I think it's an open question in the short term about whether or not we actually are at that place we're going to enter into a more boring phase, like for example this phase for gold, or if we still have another few big moves or more to the upside before we start doing that. But if you're looking at the end game for Bitcoin, it would not shock me at all if the end game looks something like we see for the stock market or for gold, as we compare it to some of those things that might be motivating people to get their money into harder assets. All right, obviously none of this financial advice. You should make your own opinions about this and what you think the long-term outlook is. But I think this is just an interesting thing to talk about. And also I just wanted to talk about how I think there's a lot of claims that are being made out there that go beyond what the data really warrants at this point. There's a lot more confidence being made in these claims than I think is warranted just looking at the data. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. A lot of updates, Twitter indicators, and more over there.